And for a closer look at Singapore's economy and the role it may play in these elections, I'm joined by Ravi Ramamurti. He's the director and professor at Northeastern University Center for Emerging Markets. Ravi, good to have you on the show. Thank you for joining us.
Thank you.
Ravi, let's get into it. The elections are taking place on Friday. How big of an issue is Singapore's economy for the voters?
I think it's a big issue in the minds of the Singaporean voters, as you heard in the report that was just filed by your correspondent. But I think the government is hoping that the people will not focus so much on the short-term economic worries, but look at the big picture of how well the ruling party has done over the last 50 years. As you know, this is the 50th anniversary of the independence of Singapore, and also Lee Kuan Yew just passed away a few months back. So I think the government is hoping the people will step back, take a long-term view, and think of this as a referendum on the PAP's performance over the last 50 years. But the economic issues are very much on the minds of the government as well as the population.
Well, Ravi, if we look at the big picture, sure, Singapore's done incredibly well. But if we look at the recent past and perhaps near future, not looking so good. Global ratings agency Moody's, DBS Bank, both have sharply lowered their Singapore economic growth forecasts for the year to below 10%. Singapore's economy was growing around 4%. So what do you make of the revision? What are the factors slowing the economy down so much?
Well, the big factor is, of course, the state of the overall global economy, which has not been very healthy for the last several years. But the big blow recently, of course, has been the slowdown in China. And I'm inferring from the fact the government decided to call the elections early in Singapore that they believe that the economy in Singapore could actually be worse a year from now than it is at the moment. So the slowdown is primarily the result of Singapore's high dependence on China as a market for its exports. Exports to China account for 10% of the country's GDP. And of course, China is a $10 trillion economy, which is 20 times the size of Singapore. So when China slows down from 10%, then to 7%, and now to who knows how much, that has a profound impact on the Singaporean economy.
Well, what is the impact of the devaluation of the renminbi on the Singapore dollar and, of course, on Singapore?
Well, I think there was a short-term impact. I think the government, the Monetary Authority of Singapore intervened, and I think has managed to reverse the impact of the yuan's devaluation vis-a-vis the Singapore dollar. So I think that is not as much of a factor as people believe. The real worry, if you will, is the fact the economy is slowing down in China.
All right, but there are some bright spots. What are some of the opportunities? Could the financial services sector perhaps benefit from the China market volatility?
Yes, I think every cloud has a silver lining. This is basically a cloud. The China slowdown is not good news for the region or for the global economy. But among the bright spots, the silver lining, I would say, is Singapore's strong position in financial services. Manufacturing is already contracting in Singapore, but financial services are growing. And I see the events in China, recent events, with the stock market and the surprise devaluation of the yuan as having damaged the credibility of the Chinese government as offering an alternative to places like Singapore for financial services. So I think this helps in a way to boost Singapore's position in financial services.
All right, well, following the election, let's assume the People's Action Party wins, if they are expected to win. What action do you think the government will take to boost the economy?
Well, I think they will try to grow their exports to other parts of the world. After all, the U.S. is picking up, and while the U.S. has slipped in its importance as an export market for Singapore, I think the government will try to steer back some of the opportunities that perhaps were ignored or neglected in the past. India is another bright spot, I think, for Singapore. India and Singapore have been trying to cultivate their economic relationships for the past few years. And they have a free trade agreement between the two of them. India is growing at a faster rate year after year compared to China, which is slowing down. And I think there's potentially complementarity between Singapore and India, which could be to the benefit of both countries. I do want to make one point about Singapore. Over the last 50 years, Singapore has reinvented itself many times over. The question is, can they do it one more time? We'll have to wait and see after the elections.
All right, we'll wait and see. Thank you so much, Ravi Ramamurti, Director and Professor at Northeastern University Center for Emerging Markets.